Hi, I'm Chad Bray, Chief Investment Officer at Boaz Capital Group. In the following presentation, we're going to take a look at the benefits of private lending. Creating wealth and passive income through private lending and trust deed investing. We at Boaz Capital Group would like to introduce you to an age-old wealth building model, originally designed by the ultra-rich, but duplicatable on a smaller scale by ordinary people like you and me. Private lending and trust deed investing allows common folks who do not own their own banks to make money similar to the way the banks make money. Boaz Capital Group is a group of 4 families dedicated to providing education and a practical application of financially responsible principles to our investors and their families. We make it possible for other families, even their children, to learn about business and how money works by investing in projects with a high rate of return and without the headaches that come with buying, owning, and managing assets. In this presentation, we'll talk about earning higher than normal returns on a particular investment secured by the asset itself. While most investments require you to give up your money with the risk of never seeing it again, private lending, also known as trust deed investing, allows you to adjust the risk knob by picking and choosing the parameters of each investment opportunity. It is also one of the only investment vehicles in which you make the rules. You get paid first, you are in the lowest risk position, and you make the most money. Private lending is not like the typical investment vehicles available, such as stocks, bonds, CDs, mutual funds, etc. Once you put your money into these types of tertiary investments, there's really not much control over what happens to it, or if you'll even see it again. Additionally, your money is usually tied up for long periods of time, requires a professional to manage it, and charges a fee to do so, and typically ends up yielding low returns depending on the level of risk of a particular stock or bond owned. Private lending refers to a private individual making a loan to another individual with the asset as collateral. You are the bank, and your name is on the note and deed of trust. This is one reason why the banks are one of the most wealthiest and powerful entities in the world. Private lending is one of the closest investment vehicles to the banking system, in which an individual can use to gain an incredible amount of wealth. So what are the benefits of this type of investing? Private lending allows your investment to be secured by an actual physical, tangible asset in which you hold a lien against, just like a bank. Often real estate is used as collateral to secure an investment. Other assets might include businesses, commodities, precious metals, and so on. This type of investment model has such potentially low risk due to one of the risk mitigating factors being the investor has a literal hold on the asset being lent against. Other risk lowering actions are described later on in this presentation. These types of investments also typically have higher returns than your usual conservative investment vehicles like stocks or bonds. Private lending against real estate, for example, is very common, as private and institutional lenders practice it on a daily basis, so it is not an unfamiliar business model. Private lenders also enjoy receiving a passive monthly cash flow as a result of their private lending investment deals. So here's a brief example of how private lending works. Let's assume that an asset in this case is an apartment complex with an as-is value of $500,000. In a private lending deal, the lender/investor would lend to the borrower $350,000. This equates to a 70% LTV, or loan-to-value. The protective equity, in this case the remaining $150,000, is what the borrower is responsible for. This is called the protection, or cushion, or borrower's skin in the game. It is this protective equity which helps lower the risk and hedges against defaults, market deflation, and unforeseen problems during a project. The reason why this type of investing is so attractive to investors is investing $3 into an asset that's worth $5 for a short period of time, essentially putting your name on the deed of trust of an asset that's worth more than the money you initially put in. Making money while you sleep. The borrower pays the investor monthly payments until the project is done. These payments, usually interest only, can be anywhere from 5 to 10%, depending on the risk and the terms of the deal. Sometimes a deal can be structured to where the investor also gets a share of the back-end profit when the project is completed, or even after. You, as the investor/lender, make the rules and terms. If a project doesn't follow the agreed-upon terms that you create, you can immediately take possession of the asset and finish the project, and now get your initial investment back, plus you get to keep the profit, or protective equity. Remember the old saying, whoever has the gold makes the rules. So why would anyone want to agree to such steep terms? Well, imagine this scenario. You're a real estate fix-and-flipper or a buy and holder, and you just found an incredible real estate investment opportunity in which you could pick up quickly a property worth $500,000 as is for just $250,000, and knew you could renovate it and sell it 6 months from now for $600,000. You only have 5 days to close escrow before another real estate investor swoops in and picks it up. Most banks don't like short-term loans and need to qualify the borrower and spend about a month vetting and qualifying the project itself. Now, with all of this, do you care if you pay your private money source a high interest rate for 8 months if it means being able to fund your project within a week and make a huge profit? This is why most real estate investors/contractors go to private lenders for funding. A typical private lending deal would include the following parameters. The borrower will receive no more than 65 to 70% of the value of the asset. This is called loan-to-value. The project usually does not go any longer than 12 months. Sometimes extensions are necessary, however. The private lender would fund as a first position lien holder, being senior to all other encumbrances on the asset. Sometimes a second position lien can be initiated by the private lender, but these are rare due to potential elevated risk. The returns are higher, but so is the risk. Interest rates that are much higher than par is very common to charge borrowers during the life of a project. Non-owner occupied properties are typically lent against when the asset is real estate. Single-family residences and commercial properties are very common. Also, when real estate is the asset, the projects are usually fix and flips and renovations done to distressed properties in order to refinance and hold for rental income. And finally, the borrowers are typically experienced individuals that have already built a good rapport and trust with the private lender. There are several factors that mitigate risk when being in the position of the bank in a private money loan. Putting a lien on an asset in which you only lent 60 cents on the dollar creates a buffer if the market should turn during the life of the project. The remaining 40 cents is the borrower's commitment to the project. They have much to lose if they default. Private money is usually used to fund short-term projects. This way, a private lender does not have money tied up for too long on an asset whose value could potentially decrease in a declining market. The borrower's skin in the game would be the buffer in this situation. Being in first position as a lender puts all other liens against the asset in a junior position to yours. This way, in the event of a default, you can foreclose on the loan and be the first to get your principal back. Each private lending project has its own team players, including the broker, the title and escrow company, the attorney that handles the legalities of the project, the foreclosure company, and the servicing company. If an investor wants to participate in funding a private lending project, their money is usually placed into either a specialized lending trust or an LLC, which is managed by an attorney. This way, no one sees or touches the investor's money except for the appropriate entities involved, including the neutral third party, or escrow. Private lending deals are extremely low in volatility compared to the ever-fluctuating stock market. Although there's risk in everything, private lending has a much higher return of investment than most other investment vehicles. The typical team in the funding of a private lending project includes the title company. These are the guys who make sure that there's a clear title to the asset before moving forward on a project. They also issue the title insurance. The escrow company. This is the neutral third party that acts as the intercessor between the parties. They're the ones who record the lien against the asset. Appraiser. The appraiser is the expert who gives the expert opinion as to what the asset is worth in today's market. The broker. This is the entity that handles all official documents and forms to originate the loan. They're often connected to the title and escrow company as well as other members of the team. The attorney. This is the law expert that oversees the legal aspects of the project. Foreclosure company. In the event of a default, the foreclosure company assists in the taking back of the asset. Similar to how the banks take ownership of an asset that they have a lien against, the foreclosure company makes the process as quick and as hands-free as possible for the private lender. And finally, the servicing company. These are the guys who make sure everyone gets paid. They keep records of who gets paid, what, and how much during the life of the project. So how does private lending and trustee investing compare to other ways of investing? Well, take for instance investing in the stock market. Having money in stocks doesn't guarantee monthly cash flow unless dividends are set up as such, which is rare. In private lending, however, a return on your investment is seen immediately and continues monthly until the end of the project and even thereafter. The stock market is based on supply and demand, in which you have very little control over. With private lending, you take control by being the ringleader of your own team, leveraging all of their talents and expertise. The stock market typically won't give you returns as high as private lending deals will at equal risk. There's also no collateral to secure your money in the stock market. In private lending, the asset being lent against is the collateral. This is where the safety comes in. The stock market goes up one day and down the next. Many investors don't like that type of volatility. In private lending, there's a constant, predictable return of investment each month, where the income is passive and you're essentially making money while you sleep. So now you see why the banks are not only the largest financial entities on the planet, but they also make lots and lots of money by one of the lowest risk mechanisms possible. This model can be replicated on a smaller scale by normal, everyday people. This model is called private lending. So who are we, and why do we teach private lending? Boaz Capital Group is a team of business partners that are dedicated to teaching individuals how to make money similar to the banks. We teach how to receive a higher than average return on investment. We show families how to grow wealth through passive monthly cash flow. We build relationships with all parties involved, not only our investors, but the borrowers that use private funds to get their projects done in a timely manner and build profit for themselves. And probably most of all, we teach this model to provide a better and safer way for everyday individuals like you and me to build a retirement so you can enjoy life the way it ought to be enjoyed and not have to worry about income. If you'd like to learn more about private lending or become a money partner along with us, please feel free to call and speak with someone on our team. Or you can visit us on our website at www.boazcapitalgroup.org.